All right, folks. Anthony Speciale here with Hawkeye Traders. We're going to dive into Quest Diagnostics Incorporated, ticker DGX. We're going to talk about this breakout that's transpiring right now. I want to talk about some preceding price action and, of course, some preceding volume as well, and why I think that there's some merit for this to continue higher. Now, with every good analysis of any trade opportunity, whether it's intraday or swing or position trading, we have to always assess the risk as well. Because if you can put together the volume, the price action, the market context, and of course always be aware of whatever the risk associated with the opportunity that you are attempting or considering employing, you have to be aware of all those components so that you can make the best educated decisions so that you can ultimately provide the best end result. Now, we do know that if we pair volume and price action together, we can get a real insight to ultimately what's happening. So that's what we're going to do. I'm going to kind of zoom in. This is a daily chart, meaning each rotation or each candle represents one full day's worth of price action. A full day is from 9:30 a.m. Eastern Standard Time to 4 p.m. Eastern Standard Time. So that's on the New York Seaboard, it's New York Stock Exchange. You can see right here, NYSE. So that's what each candle represents. The high, the low, the open, and the close within that period of time. So I want to zoom in here specifically and take a look at this wide bar. I'm going to put some markings on the chart here. So very specifically, I am looking at this candle right here. And very specifically, I am looking at this ultra high volume bar right there. Now, notice we had this very, very aggressive selling. We had some increased buying, some decrease in volume, and a huge, massive increase in buying. I think I said selling, but buying. You get the picture? And you can see that what happened here. Price pushed up into prior form of resistance, and we got rejected. Okay? That would tell me, hey, I need to now take into consideration a couple things. Is there a chance that this price action fails to go higher and falls back? Is there a chance that this price action could continue higher? Well, I want you to notice something, right? Because this is always very important. We have to put together the price action and the market context with the volume. Price, after taking this very aggressive candle, pulls back into support here. Okay, this is my hand-drawn support here off of some prior highs. And notice that we were unsuccessful in pushing through that support. And had we even pushed through it, we would still have to close below this very high volume, ultra high volume candle. So that didn't occur. So what does that tell me? I am ultimately looking for price to settle above or below this very particular candle to give me some insight to what may transpire next. Now, once that happens, which it did, we're going to talk about it. All right, we closed this candle here just at the high, but this last candle that was settled did in fact push through this wide bar with ultra high buying volume. So now we need to take that and put it into context. Say, all right, we had an ultra high buying volume wide bar candle. We understand that that could lead to a potential reversal. We also understood that price came back and found some support at this trend line. We did not test the low of this candle, nor did we violate it. So that tells me that inside this area, right, inside this area, there is still some remaining buying interest. Right? That's what I can surmise based on what is printing on the screen. I can surmise that we had this very aggressive push, ultra high buying volume. We pull back. We pull back into support. All right. We don't violate that support. We trade below it. We don't really push and settle below it. We stay within the body of that candle until we start pushing out. Our first push and close above the body of that candle. You can see we kind of squatted back in, but the buyer stepped in. And what I'm very, very specifically looking at is what are the buyers doing as we're making new highs? Okay, because that's pretty important to me. If the buyers are super sluggish while we're making new highs, I don't feel very excited about it, right? If the candles look like this, the volume candles, you can see, you know, that steep drop off, that wouldn't make me very excited, okay? But what I do want to see when I'm breaking out is an increase in buying interest, right? Our proprietary Hawkeye software is going to provide you with what's happening inside this candle so that you ultimately know who's in control, right? We saw buyers were in control here. As we pulled into the body of this candle, buyers continued to step in here and absorb whatever selling came into the market. And now we've settled above this candle, above this resistance line, proving it to now be support. You can see it was in fact retested on this last candle itself. And then we closed higher than this wide bar, making a nice fresh push on increased buying volume. That to me says, hey, I need to now make an assessment that I believe price could potentially push higher from here, okay? Is there a guarantee? Guys, there's no guarantees in the stock market, right? So just let's just put that out there. Okay? Anyone who's telling you that they guarantee you anything is unfortunately selling you an unfulfilled promise. What I can guarantee you is that understanding volume and price action, along with market context, will start putting the odds in your favor, okay? But I can't tell you for sure that this trade is going to push higher. Now, while this all looks good to me, right? We're breaking out, we're above resistance, we've closed above this wide bar, I've increased buying volume, okay? I've closed above both of these trend lines here, looking pretty solid. I always have to zoom out, right? I got to look left. Say, all right, what could potentially snag price? Right? I have a high over here that we haven't tested yet, up here at about 145.5. I have another double top right here at about 148.7. Notice this. Here's the high. We come down. We come back and retest. That is very easily identifiable as a double top. So 148 and change. Okay. I got another little wick up here of a wide bar at 150.5. And then I start working my way into this high, 154.25, 156.5, 158.30. Right? I got to look left and say, all right, if I'm very interested, if I believe that this meets all the criteria that matches your or my particular trade plan, it meets the risk management requirements, it's a trade that we're interested in taking, we like the way the price action looks, we like the way the volume looks, again, it meets our criteria, we're comfortable with the risk associated with it, where am I going to start taking profits, right? Now you could do a couple things. You can, on the breakout with aggressive buying volume, that's certainly a very strong signal. This could always come back and retest this trend line as support, right? So notice we have an impulse, a very short-term consolidation, another impulse, we could experience another consolidative state, perhaps even a correction state. Any of those things could in fact come in play. But staying above this trend line, staying above this prior high here, should put us in play to probably squeeze a little bit higher, right? As long as there's no, outside forces that step into the market and say, all right, we're going to take a whole bunch of profit here or whatnot. But this looks strong. So this is how you analyze the market and say, all right, guess what? Quest Diagnostics, it's on my radar for this week. I'm going to see how it plays out Monday, Tuesday. If it still continues to look strong, I may be interested in taking a position. Okay? But why? I'm able to come to that conclusion because I'm able to understand this ultra high buying volume. I'm able to understand that the buyers did not let the sellers violate the base or body of this candle. We came into some form of support which seemed to hold nicely. We've now pushed through the top of this wide bar that we received some prior rejection at. Those are all really strong signs. And not only did that happen, but it happened on increased buying volume, guys. Okay? That's super important. When you see a breakout or a breakdown, it should be on increased volume respective to the direction that it's going. If it's on super weak volume, well, you know, that kind of takes the odds away. And notice this candle, right? The high of this candle is 144.46. The close is 144.34. We are 12 cents off the high. That's great. All right, we want to see, when we are increasing in volume, we want to see the candles closing at their highs or their lows respective to the direction in which they're trading. So putting these components together allow you to bring the analysis into sight, and not only into sight, but into a clear sight to say, all right, I like the volume, I like the price action, I like the market context. Here's my risk associated if we can't get through this most recent high. But if we're able to, there's a good chance we can continue to push onward and upward. I want you to also notice something about the lows here. Okay, this came to my attention because, again, when you look left, you start to notice things. Just notice those lows there. All right, now I want you to notice these lows here. What are they into one another? They're higher, right? In fact, we have a base here, a slightly higher low, a big impulse, a correction that's also slightly higher than that low. I'll move that out of the way so you can see it. I'll hover the line there. So again, we made another higher low. We've made a higher high. We pulled back, another higher high. We've pulled back. We've made an impulse, a little consolidation at resistance, and now we've impulsed through that again, creating a higher high. So I have significantly higher lows, and I have significantly, on both the short term and the longer term, higher highs. The market context tells me that the trend is intact. Again, does that guarantee anything? No. But being able to put those components together, volume looks good, price action looks strong, market context looks like we're in, a substantial uptrend based on the bigger picture, right? Where's our risk? Our risk is we get snagged at this high right here, okay? If we get snagged at this high right here, that's the risk. If we don't, we push into this little double top, which I believe is going to provide stronger resistance than this single high right here. So what would I do? If I was going to take this trade, I was going to enter long, it met all my criteria, I'm going to do what? As the market offers me the opportunity to take money, I'm going to pay myself and protect myself. So if the trade decides it doesn't want to go all the way, it doesn't want to blow through those prior highs, okay, I took some short-term profits, I protected myself. If I get stopped out, it is what it is. But if I'm right, based on the volume, based on the price action, based on the market context, and we don't get snagged here at these prior highs, we could push easily into the high 148s and maybe even retest these recent highs up here. And if we can push through them, guys, I mean, we could be looking at 160, the double top at just short of 175. So there could be very strong upside potential here. But just by noticing, we have lows, equal lows, higher lows, higher lows. When you, in an uptrend, you want to be looking for those higher lows, right? Higher highs, higher lows, higher highs, higher lows, okay? It's never going to be perfect, but does the general context of what the market is displaying show you that? In this case, it is. Again, I can't guarantee Quest Diagnostics is going to go higher, but I can tell you that it would check a lot of the boxes as far as the volume, the price action, and the market context goes. Why is it easy for me to do that? Because the Hawkeye tools display the volume in a way that allow me to very easily interpret who's in control. The Hawkeye Mastery class that we include with these indicators teaches me how to read and interpret this price action and market context. So the next step is yours, guys. There's links below this video. I encourage you to click on them, consume the content, reach out with any questions you may have, And guys, listen, if your trade plan is not volume, price action, market context forward, I can assure you, you're not getting as consistent of results as you possibly could be. I appreciate each and every one of you. If you enjoyed this video, if you learned something, feel free to leave a like. Don't forget to leave a comment below. I will certainly respond to it. And if I can do anything for you, always feel free to reach out. I'll see you in the next one. God bless, guys, and have a wonderful day.